Now is Jerry Castellini. He's the president and chief investment officer of CastleArk Management. Jerry, it's good to see you. I mean, do you want to just offer a kind of a broader comment on the rush into year-end, into Bitcoin, into some of these mega IPOs, into some of these companies like Tesla that I just named? What is it telling you?
Well, what it tells us, and you think about this, Kelly, we've never been in a situation before where there's this much cash or something like cash sitting on a sideline in front of what is a really highly probable explosion in economic activity around the world, right? There's just too much uninvested capital. So the first places they go are to speculative things like Bitcoin, and the next place they go are to tried and true growth names like the Teslas, like the Microsofts. The fact that they're going strong all the way into year end probably reflects that, okay, I have to buy something, that'll be it. I think our bigger question is, what about some of the things that could happen in January and the rest of the winter? And what do we do after we see this move in moving some of that capital back into the markets?
Absolutely. That's the trillion-dollar question at this point. Jerry, let me just ask you about the dollar. You know, I don't want to overlook what's been happening there the last couple months as well. And so everything priced in dollars has to go up if the dollar's weakening. Dollar index broke below 90. It's a key level psychologically, although probably 88.5 is more around the 6-year low that we're eyeing. But still, you have stocks going up, home prices going up, Bitcoin going up, playing cards going off at record prices. Is that a large piece of what might be going on with this whole momentum trend, or is that kind of a side story?
Well, here's the way to think about the dollar. The simple way is the dollar was strong through the better part of the last decade simply because the U.S. economy was the best place for someone to make a dollar investment. Our economy grew better. Our economy had a more stable financial system. If you remember, there were parts of the world economy you wouldn't trust with anybody's money starting right around 2010. Think about what's happened over that time frame, though. All those economies have now recovered. They've built back into themselves some much greater stability. The U.S. has done fine. But what's interesting is how much the non-OECD nations have now begun to recover from COVID. So China, India, Brazil, those are economies that are actually lapping last year's growth rates. And if you think about that, it only makes sense that investors will now start to broaden out their dollar investments into some of these economies. And I think it also gives you a great thought about what will happen in the United States, because we will end this with our vaccine, and we will be in probably as good or better position than those other economies. So I think there's two waves of growth coming that will impact investors. It'll first surge into the overseas markets, and then it'll flow back in the United States. And wait till you see what happens to some of the cyclical names as we move into the winter and spring of next year.
Yeah, and I'll have to leave it there, Jerry. We have some news coming in, but just so everybody knows, in your portfolio, while I mentioned you have names like Microsoft, Tesla, and NVIDIA on the growth side, you do like Valero, MasterCard, and Las Vegas Sands on the cyclical side as well. Appreciate your time today, sir. Thank you so much.
Shepard Smith here. Thanks for watching CNBC on YouTube.